value looking okay, but the dividend in the past is looking poor. The snowflake description, according to Simply Wall Street, shows that mediocre balance sheet with moderate growth potential. And we can see that Weatherford International has a significant price volatility in the past 3 months. And these are just some of its competitors, looking a lot more healthy than what Weatherford appears to show. When you look at the current, it seems to be supposedly at a good price right now. Share price is 65 cents versus future cash flow at $1.67. So they think this is, Simply Wall Street thinks this will be going up. Weatherford International share price is below the future cash flow value and at a moderate discount, greater than 20%. Weatherford International share price is below the future cash flow value and at a substantial discount, greater than 40%. The bad news is that Weatherford International is loss-making. We can't compare its value to the U.S. energy sector's average. Weatherford International has negative assets. We can't compare its value of its assets to the negative services industry average. This is not looking good. When you look at the expected annual growth rate is 127%. We can see the earnings growth seems to be better than the revenue growth. We can see that the estimated seems to be somewhat close into the expected range, into the actual range. And we can see the past and the future earnings per share over here. And when we look at the performance in 3 years, we can see that it is unable to establish if Weatherford International will efficiently use shareholders' funds in the future without estimates of return on equity. I agree. Weatherford seems to be doing a poor job in managing money and assets. Weatherford International does not make a profit, and their year-on-year earnings growth rate was negative over the past 5 years. Unable to compare Weatherford International 1-year earnings growth to the 5-year average, as it is not currently profitable. Unable to compare Weatherford International 1-year growth to the U.S. energy services industry average, that is not currently profitable. And when we look at the performance per year, we can see that is a minus 33% return on assets. We can look at it as a 2.56 return on capital. It is difficult to establish if Weatherford International